bulletproof strategy.
Like an Iron Man Jarvis kind of thing.
So our jobs are secure.
I wasn't going to trade anymore.
It actually, gave me another perspective.
We are definitely hitting 100K or probably 500K.
Outsmarted the market.
That is why I always have a cup of coffee by my side.
Is that the reason why scalping is your favorite? Hello everyone, it's Gaspar here. I'm having today two very special guests with me, both experts from Olymp Trade, Shahbaaz and Alex. Welcome, thanks for coming. And I'll tell you straight up front. So Alex informed me that if he doesn't have a cup of coffee in the morning, the entire day he will be having a migraine. Is that correct?
Yeah, that is very true.
So coffee is how you start today, right?
Yes. And also it complements my trading mood because it keeps me focused.
Oh,
So it does gives me that kind of energy, the vibe that I need.
Okay. So it's easy mode. You get a shot of coffee. Shahbaaz, what about you? How do you start today? You have anything like this? Like if you don't have something, then you will have a migraine or whatever.
No. Actually, I start my day with reading news,
That's a smart guy. Reading news.
Yeah.
Okay, let's get to it. What kind of news do you read?
I just check, like the Wall Street Journal or the Indian market, how they're performing to get the general idea, like how should I trade my day. So it gives me a basic overview of the market.
Like, do you do that every day?
Yeah, absolutely, every day.
That's nice. I mean, I'm impressed. Like, I would be lazy to do that every day. No, honestly.
Trust me, it sounds very consistent.
And how long, what kind of time do you dedicate to that? I mean, it's like 50-minute screening through the news, or like you go a bit more fundamental? How do you do that?
Actually, I devote, I would say, more time because, I have to check Indian market, how the Asian market is performing, and what about the US asset, how they are performing. Then I try to find some links, how the market is behaving like this, what is the reason. Then I go to the news. Is there any specific news on Wall Street or Bloomberg which will give me an insight? And that makes my day more generalized, that how all the asset, the bigger market is.
Yeah, I get it. Now, let me ask you then, because I know, people are all different, right? Obviously, traders are also all different. Yeah. So I'd say most of the people I know, they are not too much used to reading, like in general, right? I mean, this scrolling, tweeting, whatever, like that doesn't count. So, serious reading. What you said, like, it's serious reading, right? You have to analyze, you have to think, you have to find correlations. My question is, did you have to teach yourself to become like this? Because, like, for example, okay, I want to trade seriously. That means I have to read news. Therefore, I have to train myself to read. Or you've been a reader, like, pretty much naturally by yourself. Like, you've been reading all your life, so there was no such kind of disciplinary transition into that. Like, how did it go to you?
I would say I was reading when I was young, but I was reading comic, different kind of funny stories and some kind of story for the kids. So I was into reading, but not serious reading.
Okay, I get it.
Like financial reading or something like that. But as grew up and I realized that this is the field I should explore, Then I started reading, trying to, if I don't know something, for example, when I started, I was from some different background. So for me, everything was new. And at that moment, I was trying to, if I don't know any financial term, I used to Google it and get the information about it. And slowly, even now, like when I see something weird, which I don't know, then I just Google those words in my search, and then I try to figure
that's nice. So, it's constant self-education, basically, right?
Yeah.
I think it's a very healthy approach. How about you?
Yeah, same here. I think when I also started out, it's basically about reading and also trying to understand the whole dynamics that play behind the scene in terms of the price movement on most assets. And besides that as well, I think usually the news, that is, we have most influencers because they have more or less the access to the news right when it comes out in terms of breaking news. And sometimes some of these rumors or some of these influences, they kind of, they give you some kind of a sentimental understanding in terms of how you should, how you should plan your trade and also how your overall trading plan should look like. So let's say pre-COVID, for instance, we had a lot of influencers who were vouching for tech stocks because you realize that when COVID kicked in, most stocks were literally down. But then we saw that a lot of tech stocks were constantly rising. And that actually, formed part of my big break in terms of, investing or trading, considering trading as a full-time job rather than something, or rather than a hobby that I could just, sit back and just chillax and feel like, okay, I can just open like maybe 5 trades per day and just sleep off. But after that period, I'll see.
Okay, so you're saying that initially, or at least before, you were doing it, let's say kind of like a side thing, right? And then it transitioned to full-time job. That's interesting. I'm sure for a lot of people, that's a question, like where to put trading in their life. Should it be a side thing to do, or should it be a full-time? And I'm sure, obviously there are a lot of considerations, like pros and cons for both. But let's start from the beginning. How did it happen for you to get into trading in general? Like, for example, in my case is pretty simple. In the times when I was young, like in my 20s or something. So one of my first jobs was I was working in an investment bank, investment consultancy, and the things like that, right? So my job was to consult people, potential clients, on the possibilities of how they can grow their wealth by investing into things. So in that company, I met a guy, and he was my colleague. What surprised me is that, according to what he said, I didn't need to have big amounts of wealth to invest them to get profits or to kind of get into that thing. Because before I thought, okay, it's the world of investment. It's a different world, I thought. So I thought, although I'm a kind of a lowest level employee in that same world, I can't get up into there. But what he told me is that there are ways to make your funds, your money work for you, even not getting like all in with your money, putting like putting it to a big thing like investment funds. So he opened my eyes a bit, like, okay, there are things. One of them is trading, different things. We can start small. Like, it requires certain things. You have to read that, educate yourself. So he made this introduction for me into this world, and then slowly I started accumulating my own knowledge and so on and so forth. How did it happen to you?
Well, in my case, it was just out of sheer curiosity. I had a background in business, so I just wanted to understand what drives, that is, the movement in terms of price, or in terms of asset valuations. So out of this big break, I just thought of, let's say, why don't I consider something that can generate some level of, passive income for me? And here's the case, I was in the university, and, I had that desire to do something that...
So you were still you were a student?
Yes, I was a student.
Right.
And interestingly, I had a couple of roommates who were already exposed to the financial market. And always I could see them, sitting in the study room, trying to, put all 3 heads together, trying to understand the movement. Okay, let's open this position, don't trade on this. So I always sat back and marveled, no, what is going on? What are these guys doing?
I guess they were very serious, right into that.
Trust me. And these guys, they were literally well-to-do. They could afford, some luxuries, some stuff.
Could they?
Yeah.
I mean, did you see really? Because that's the thing that holds people, right? Because I've seen also a lot of guys, well, also in my university, a lot of different people were into different things. A lot of them were also very devoted into things. But the deal breaker, as you say, is when you see that the person who is devoted and dedicated to something, when that person gets fruits, gets results. So, I guess if you saw those guys getting, looking into those screens, and you saw then certain, like prosperity, I wouldn't say, but certain extras that come in, that personally, it forced you to think, okay, I need to explore that too, right?
Trust me, these guys were traveling all over the world, for holidays.
That much?
Yeah. They were very well off to do. And I couldn't imagine when they started this whole trading stuff. So I spoke to one of these guys because we happened to share the same flat, in terms of the floor, and asked him how it all started. He said, well, they chose to become financially independent rather than to rely on their parents or maybe handout. So they started with something small, consistent practice, and also like educating themselves in terms of where to start or when to start. And always the main question has to do with when to start, because you can accumulate a lot of knowledge about what to do, when to start, what the market is all about. But a big break comes in when you start trading. That is when you start practicing, you start opening some live deals, then it generates some profit.
Again,
And then it gives you the momentum to continuously, to trade, to make extra profits, and then take it from there. So these guys exposed me to the market to a certain degree. And then I just decided to, take it from there. So it was mainly curiosity. And I'll say so far it has been great.
but all of you, like you and them, were having a financial background, right?
Yes.
Right.
Yes.
Shahbaaz, what's your background?
So I have done bachelor's in technology.
Okay.
So I didn't had, when I started trading, I didn't had my background related to finance. But there is very interesting story how I started. My father used to invest money in mutual funds and something. And my neighbor has used to come to my father and get consultation.
Oh, okay.
Yeah, really. And I was very curious that what is this thing, like how my father invests, what is investing, and how these guys are coming to me and asking my father about it. So I asked my father the same question, like how do you invest? What is stock market? And from there, my journey started. I got fascinated that what the stock market really is. And when I started, I only knew about the stock market. But later, as I evolved, I came to know about the forex market, about the gold and different asset bonds and everything. And it was, I would say, it is really interesting sphere to explore, never-ending sphere. Every day there is some big event, different events happening, different asset performing in different way. So it's always, it gives my brain, that level of excitement every single day. So it's really interesting for me.
So kind of it started inside the family with your father, right?
Yeah.
Then was it your kind of independent way in trading, or like were you from time to time consulting with him, still like having his advice, or did you like go separate? Like how did it happen?
Actually, my father is more into investing. I'm more into trading.
Okay, I get it.
So I was in trading, and my father used to tell me that you can also invest at the same time, which is really nice advice I would give to our viewers as well, that devote some capital for trading, also devote a little bit of your capital into investing so that you have a long-term compounding effect in your returns.
You know what, it's good that you mentioned, obviously in this sphere of trading, trading and investing, these are two kind of basic fundamental notions, right? Basic to the concept. But I'm sure that for a lot of people, it's not very obvious what are they. Like, would you be able to like define, or if not describe, how investing and investment is different from trading? Like, how do you see it?
I'd see investment as risk-free. For example, because when you invest in certain asset, you choose the best one. For example, you choose Apple, for instance.
Okay.
You know that the company is stable and it will sustain for long term. So you start investing a small capital every month, maybe like every 3 months, quarterly, and you wait for the compounding effect to work for you, and eventually you get some reward. You get the money at the end, like a pension, I would say.
Okay.
At the same time, if I will say trading is a more like a day trader kind of a job, when you are in constant search of best opportunity to get the best result in some short time period to capture the move. So it's more like a different sphere when it comes to investing in trade.
And I understand that the humans, the traders' activity also differs in intensity with both. Like if I understand correctly, with investing, it's more like, I would say, not like laid back, but it's more about reading, fundamentally thinking through like far away into the future, where would it go, but then making a decision. But once you make it, you don't go into like day-to-day activities correcting some, you may be checking, right? But once the investment is made, you let it actually accumulate, right? Whilst with trading, you actually do things every day, don't you?
Yeah. I think similar to what he said. In my case, when I was initially exposed to the financial market, my dad bought a couple of shares from one of these banks, like, major banks. And after 30 years, when his dividend, came out, realized it was nothing. That was when he advised me that, no, don't buy shares, don't invest because of the inflation rate. And also, there are a lot of factors that can be attributed to that. So it's better you trade because it's more or less like constantly trying to identify opportunities in the market and then you capitalize on that.
Actually, it's very precious because in most of talks and videos like this about trading, about investment, I understand that people want to show like positive results, right? So they seem to be willing, obviously, naturally, they're willing to discuss their success, right? So they're saying, okay, I've done this and that, and I've enjoyed the fruits of my investment, the fruits of my trading. But hardly you can hear anyone saying, I've done this, or I opened this trade, I invested this, and then it was almost nothing. So don't do that. Like you can barely hear that. Yeah. So what you're saying is very precious because I also had negative experience with trading, but that is exactly what became a major lesson for me, right? Because I can't imagine anyone who eventually became a successful investor or a successful trader with making no mistakes, right?
Yeah.
Now, look, we have now an interesting picture. Fathers of each of you had experience, and they were investing stocks, right?
Yeah.
Was there anything that your father or your father told you about how is it best to choose a stock? How to choose a worthy stock? That's the question.
I would start, there is a thing known as index.
Right.
So rather, if you're confused which stock to choose, you can just pick S&P 500 or, the Indian index and just invest in index. That's what my father told me, that when you invest in index, you don't have to worry a lot. The bad stocks are automatically removed from this main index. So every time that index is the best stock of the country. So although it gives lower return than a single stock, but it contains much lower risk. So index investing is better.
So it's like a safe mode choice.
Yeah,
right?
Safe way of investing in share. So,
but I would say investing in index is like, investing in a basket of fruit, and the rate of return is comparatively somewhat lower compared to, let's say, actively trading. So let's say on the Olymp Trade platform, for instance, on the fixed time trade mode, you are guaranteed of a fixed rate of return upon a lapse of a certain minute. So in this case, let's say once a news is about to hit the market, you can take that opportunity and have a big break compared to, let's say, investing in a stock for like, let's say 5 years or 10 years. The amount of return that you are guaranteed to receive will be somewhat comparatively lower than, let's say, actively trading. So in this case, that is why I think, and in his case as well, I think that was the main backbone to the story that he was telling me about investing and trading. So that actually gave me that motivation, and he said, okay, why don't I move into active trading rather than, to sit back and then invest and just be receiving a little, very minute dividend
I get it.
at the end of it.
About sitting back and active trading. So let's assume that like the two of you are a trading/investment consultancy. I'm a beginner, right? If I come to you and say, okay, here is my possible deposit, the fund that I have, I want to get a big return, quick, like because let's be honest, that's what most people want. They want big money as soon as possible, right? So all these solutions lie in the in the domain of compromise between the speed, right, and then the amount of return, and the risk, obviously. So, is it sensible? Is it rational? Is it acceptable to come to the market, to approach the market with such thing like, I want to get big money quick? Or you would say straight away, no, that's not serious, that's not going to happen, you have to do this and this and this first? Or is it possible? I mean, is it possible?
It is possible. And the first question as a, financial expert, I will ask to him, how much money are you willing to lose?
Yeah.
Just define that to me first, because that will define how much risk I will take on your money.
How much money you mean in absolute amounts or in relative to what? Like,
For example,
how much is how much you mean?
I mean that if you come with me for a 1 million ruble, for example, or rupee, Indian rupee, and in that sense, I will ask you, do you want to take risk on this 1 million rupee? That should I invest everything in the riskier asset? And what if there will be potential big losses? So how much risk do you want me to take on your money? Do you only want to lose like 100,000 rupee, for example? Then I will put the money in that way. I will invest some money. I will take riskier trades on certain amount of money. So it all depends on your risk-taking ability, I would say.
And is it always kind of direct relation between the risk that I'm willing to face and the potential profit? Is it always like this? I mean, is there any way to potentially have big profit at low risk? I mean,
there are sometimes opportunity, but you cannot say that you will get that opportunity every day, For instance, there are a term known as arbitrage.
Okay.
So there may be some instances that in one market, the stock prices are relatively higher, and second market, it's lower. So we can gain from that difference. But this doesn't happen every day. So yeah, there is sometimes you can get big money with low risk, but usually the correlation exists in the proportionate way that higher risk, higher reward.
Yeah. Let's say if I have, I don't know, just trying to relate to most of people, obviously, in my understanding, if you have big fund, let's say, I don't know, $100,000, that's a pretty decent amount of money, right? So I'm just assuming that if a person is willing to put, if that's a reasonable person, then having this amount of money, willing to put it into trading or investing, that means that that person is already kind of pretty well off, he's wealthy, right? So even if that is lost, then that person would probably have another $100,000. So I mean, for someone who has access to a large amount of funds, risk probably is not a threat, is not as a detriment as to most people out there who, let's say, all they can afford to invest, let's say a month, if it's like $200, for example, then for such a person losing $200, like that will be painful. I understand. So my question is, how different do you think approaching risks in the market and approaching trading and investment decisions would be for someone who has low levels of funds and to high levels of funds? Like, I'm not sure I'm making it clear. What do you think?
It's correct. During my live streams, I always say to traders that don't think if someone is having big capital, he will always have that big capital. A wrong trade, a single wrong trade for him can take him back to the start where he started from. So always, even though you are having a small capital, just try to build your strategy, go with consistently, slowly, and just manage your risk and go in a disciplined way so that eventually you will become that guy which you are comparing with. So always it's about going consistently with discipline and managing your risk. So,
actually, it's good that you're mentioning what you said. It's all like you can become like that guy, right? So obviously everyone has seen a lot of videos on YouTube and everywhere else. There are a lot of people out there in the internet, right? So a lot of them, they show the results. They show that they've become this, that they've reached this and this because of trading, right? And obviously there is a lot of scam. Right? So for a beginner who is willing to start this thing, right? I think it's pretty difficult to kind of identify who of these people out there who is real and who is not. Is there any way to kind of distinguish straight away, like who's real, who's not? Is it possible, or like you can't know?
Well, I think it depends on the angle that you look at it from, because until you practice or you open a couple of trades by yourself, you wouldn't understand whether if who is real. And also, if everyone is showing it's merely impossible to have a 100% success rate in terms of the number of trades or deals that you open. So at some point in time, that is why I do encourage most traders, that is to actively practice on their demo account for at least 1 or 2 months.
Okay.
And also in terms of the risk to profit ratio, at least you can afford, in case if you try to switch from your demo account to your live account, that is, you limit yourself, your risk exposure to at least 1% or 5% maximum, just so in case if you have a loss, it wouldn't affect your overall balance or your overall turnover.
I get it.
So in any case, once you know, this your whatever strategy that you have, in case if you make a loss, then you get to understand that losing is also part of the game, because it's also part of the learning curve. You get to enhance or better, let's say, reevaluate your strategy, and from there you can open more trades. But then if you consider most of the influencers, of course, some of them show very positive results because one, they want to attract a lot of likes, and also they want to make trading seem super easy, super cool, because they feel like, okay, once they're able to show 100% results, then they are guaranteed to have access to, you know, some naive followers, that is, who don't understand, you know, how the market operates, and also that losing is also part. So I think it works both ways, and also in terms of the angle that you consider this from. Because if you're actively trading, and even from your demo account, after a couple of losses, you get to understand that, okay, it's normal, but how do I balance this? How do I make more profits, or in terms of the turnover, so that I don't lose all the money that I've invested in whatever assets or whatever positions that has been open?
I get it. So basically you're saying that the main thing is to kind of be real and be reasonable, right? So for example, if someone like an influencer shows like immense profits, like 1000% in 3 seconds, then that's not likely probably to be the case, right?
No, I think some people, you know, it depends on their trading style, because it's like wine, it's like a fine wine, so it ages. Once you trade after, like, consistently after a certain number of years, you get to understand like good entry points and bad ones, so you get to separate the noise from, you know, the real deal or the real positions. So you are capable of making losses, but of course, in terms of if you have an influencer or someone who showcases like 100% success rate, that should somehow, you know,
At least an alert.
Yeah, alert. Okay. And you can give it a try, at least from your demo account, just so you get to understand whether if
it's about demo account. It's a very interesting thing. We'll get to that in a second. Before that, I wanted to ask you this. Most of these people, they like positioning themselves and advertising themselves as if, no, they like saying something like, this is 100% strategy with which you will definitely, absolutely, for sure, guarantee you will get this. So my question is there such a thing as a strategy or like a pattern or something else that works 100% all the time, always, like in like bulletproof strategy? Is there any strategy that can be bulletproof or not? That's my concern, because my own view is that, as you said, with experience, people like professional traders, they develop their approaches. They leave what's not really functional. They keep what's functional. They refine their approaches. But I think that, however effective a strategy is, still it can't work all the time. Like maybe it's 99%, but still 100%. Because to me, the market out there is like it's the world, right? Like it's live. You can't just take one or a set of strategies that will be always working, because that thing is the universe of human decisions, right? So is it realistic what I described? Or?
Yeah, you know, interestingly, there are some traders who have very positive, or let's say near 100% success rate. That is, traders who understand economics, that is the macroeconomic factors that influence the market. So in terms of trading on the news, they are more guaranteed to, get more profit because they know in terms of the volume data, they've studied the market consistently. So they kind of understand, they have a better eye view of how everything is expected to move once the news hit the market. And similarly, there are some traders who don't consider that is these macroeconomic, factors. So they more or less use their own intuition and their strategies, like you mentioned. But mind you, these strategies are just like tools. So the decision making actually comes from us in terms of our emotion, discipline, and our trading plan as well. So if you have a very good trading plan and also you have a strategy that has worked for you, then you are guaranteed to make, massive amount of profit. But of course, it doesn't always, I'm not sure we have a 100% accurate strategy. That is why there's always the need to backtest, your strategy, make, some tweaks, and not all strategies or not all indicators react to assets in the same way. So there are some indicators that wouldn't, react to the indicators or the strategy that you developed. So there will be the need to, fine tune it. And after making a couple of losses,
intuition. It's good that you mentioned it. At the very beginning of my experience with trading, I've had a lot of cases when, for example, I think it has to do with the learning curve. Like you learn something, then you reach a certain point where you feel like you've learned a lot, but actually it's definitely not a lot. But you feel confident. So when I was at that point, I felt very confident. I said, okay, I've learned the market now. So when I was opening trades, I thought I had this intuition thing. So it took me just a couple of trades when I saw that no, it wasn't intuition, or if it was wrong. So my question is, people are different. Some of them are, let's say, less emotional. Some of them are more emotional. Some of them are more analytical. Some of them are less analytical. Some of them, I can accept it may be the case. Some of them feel the market. Some maybe because of experience, maybe because of knowledge. Is there such a thing as a market intuition? Like Shahbaaz, do you have that? Or like, do you use that? Or like, intuition is something different for you?
For me, intuition can be real, but it has to come from data. If the data is saying you certain intuition, there is a reasoning behind it. For example, you saw that the Saudi Arabia is saying that they're gonna cut the oil supply. Then you know that the prices will go up. It has not gone up, but your intuition is saying based on your data that this should happen because supply has cut. So now the decision is yours. Will you take the uptrade or not? Because although there can happen that the prices will go sideways, it will not go up. In this case, always you can just put a stop loss that $2 less. If it will not go in according to my intuition, my data, then of course I will take a small loss and I will go out of the market. Although if it will be in my direction, I will maybe gain like $3, $4 or $5. So in the positive side, I'm in the big profit. But in the loss side, I'm only making $1 or $2 of loss. So
I get it. So you're saying that even if someone feels that there is intuition in place, that intuition needs to be checked against real life data and things like that, right?
Yeah.
Right?
And about when I started, I did mention, I learned from a couple of like my flatmates. So these guys, they heavily invested into bots.
Okay.
Because they wanted to take, the human, the emotional aspect out by relying 100% on data. But you could tell that even their heavy reliance on this bot led to some losses. So at some point in time, they had to pause it and then use their own intuition. That is to make whether that's like buy or sell this decision, because the bot just takes the human element, that is the emotional element, out, and then focuses on that is the volume data, the sentiment, that is the market sentiment, whether if more people are dumping this stock or buying more of this or that. they made profit with that, but still they had to rely on their own intuition.
That's very interesting. In fact, I'm trying to imagine what kind of situation it should be, because I mean, what's the motivation? If those guys decided that they want to use a bot, right? That means that they are already their approach to the market. They want to minimize the losses and their own psychological, emotional effect of trading, right? If they are already at that point, what can the situation be that it forces them to kind of back off on the bot and still use human intuition? Like, how is it?
Because I think basically it had to do with their loss ratio. So like I mentioned earlier, in terms of the human element, so let's say that we have the interest rate decision pending. Based on, it's not fair, the bot takes the human element out in terms of understanding or going through the pattern to understand whether, if let's say over the past month or the past quarter, how has the market fared and how is it likely to play out based on these factors, that is the inflation rate or other dynamics, that influence the interest rate decision. So similarly, this bot, that is because it's tweaked to react to the market in a certain way. And of course, it's not a universal bot, because it's something that, like, it's a strategy that they've mastered, that they feel that, okay, it's supposed to react in a certain way once it hits these set of triggers. At some point in time, once they started recording the losses, then there was the need for them. That is why they were constant, or like a lot of times that I saw like these guys all together, all three, analyzing the market. So at some point in time, our flats became like a trading room where we have like multiple screens. Then this guy will call this guy, come and check this out. What do you think? So it made me understand that yes, there's the need for that human element, that is that intuition to understand whether if you have to take that step or not. Because imagine if everyone was supposed to, or is supposed to rely on a bot, then I guess there wouldn't be the need for, for us to trade, because you can just sit back and the bot does everything for you. But then, of course, it's not possible to make 100% profits because the market is unpredictable.
Then what do you think on the following? Now, we have all this AI development, right? This ChatGPT and stuff. And so people seem to be very kind of optimistic and amazed with what it can do. Bot is a bot. Let's say it's a pretty kind of a basic or whatever robot, right? Do you believe that at some point of time, AI, like this ChatGPT, whatever, can become that advanced that finally the human element will and should be replaced? That finally it will get over the human mind? Because now you're like, fundamentally, if we are saying that the guys who are using the bot, still they face situations when they want to use their own mind. That means that deep inside somewhere, conditioned to a certain market situation, still they believe that their own human mind is superior to the bot, which is technically, obviously superior to their kind of, let's say, ability to do a certain number of trades. Like I can make only a certain number of clicks in a second, right? And both can do 100, whatever. But I guess they believe that, okay, at some point the risks are that high that they can't rely on the bots, right? That they need to kind of use the supreme ability of the human mind. Now, do you believe that AI will finally become that supreme thing? That those guys, in this case, they will have no. We are now in a serious situation that we have to rely on the AI. What do you think?
I think, I have tested bots myself, and I think bots work in a unidirection market. For example, you set a 2% upside and 1% down. Whenever it will fall, it will just buy it. But what if the prices will go downwards? The bot cannot take their own decision. It's just the percentage of profit and loss which it takes. Then rather than investing in bots, you can just buy the asset and hold it. You see, it's the same. So bots are basically doing nothing. They are not profitable. But when it comes to the AI, artificial intelligence, you know about Jim Simons. He is the mathematician and a billionaire. Like he has like $30 billion of assets. So even, even in one of his strategies, he mentioned that if there is a rain in Houston, he can just predict the stock price in New York. So this is all mathematics. And when it comes to the artificial intelligence, if there is 10 books on this table, I can read it in maybe 1 month or 2 months. But an AI can read it in seconds. So he has a more access to the data and the faster access to the data. And if the AI will be, used with the mathematics and with the financial data, it will, of course, on a certain point of time, I won't say that it will replace human, but it will be very, very helpful for a human being to be with AI. Take it, like an Iron Man, Jarvis kind of thing. That you will have your own brain, but the Jarvis will do everything for you. That Jarvis just analyzes stock price of Apple and compare it with random thing and just give me your...
So our jobs are secure. Because if AI wants to take over human mind, then we will all be left jobless.
No. I think basically like AI is just meant to facilitate, to make our work easier. So I think over time, it's going to be integrated into the whole...
Well, they believe that now humans tend to think that AI is only there to facilitate their own being. But then there are others who say that once the AI crosses a certain limit of intelligence capacity, it will be the AI who will think that the humans are out there to facilitate our own AI as it being,
Yeah, but I think if it all leads to a mutual good, why not? Because like you mentioned, if let's say we have a pile of books here and it's supposed to take like 1 month to read them, I think the AI, whatever tool it is, can more or less enhance this process by quickly scanning through and then like scanning through these pages and then summarizing the whole, that is the entire context, and provide me with useful recommendations in this regard. I think AI is going to more or less, support traders in terms of making data-driven decisions when it comes to, managing funds or managing like whatever money has been invested. So I think it's at some point in time, it will become a win-win affair because, well, it's more or less, especially if you're having 100% success rate thanks to AI or making data-driven decisions, then why not? I think, but I'm not sure it's capable of taking the human element out in terms of making these trading decisions. Like you mentioned about a bot, it's based on some set parameters. So at the end of the day, there is still the need for that human element that is to come in to understand whether if, there is the need to open this position or not, whether if it should set this appropriate stuff.
Exactly. So we can say, cool down, people. AI won't make it rich. You still need to come to us, right? You know what? Before you were speaking about demo account, and I remembered that I started trading with a demo account, and then I accumulated a certain amount of knowledge and kind of expertise, whatever. And I remember that moment when I feel like, okay, it seems like I'm getting consistent profits on demo. So then logically the next step is to start trading with real money, my money, right? And it took me quite a while to kind of psychologically accommodate myself to this thing, which was surprising because I thought, okay, all one needs is just to get technically skilled, like where to press, where to look on the chart, and then that's enough to make kind of reasonable trading decisions. But then I felt like, okay, now it's time to trade my own money. Okay, it's my money and my precious money, right? So even if it was about like $5-10 or something, I felt like I don't want to lose that. Like, and I feel like not that I'm scared. Like, I suddenly felt this, emotional drawback, which compared to my confidence in demo trading, which was very surprising. Like, how did I get down here if yesterday trading on demo I was very successful? Now I'm down here, and how is it possible? And then I thought that, okay, it seems that the psychological ambience, right, when you're trading live and you're trading demo, like, is different. My question is, is there any advice for people to overcome this psychological demo to life transitioning easier, or is there nothing?
I usually, it sounds weird, but I usually don't recommend to trade in demo account.
Oh.
The reason is what you mentioned. If I lose $10,000 in demo account, it's not my money, it does not give that psychological pressure on the brain that I am losing money. I have to think better. It's just like, okay, I lose, I will try to find something. But if you will have $1,000 in your real account, even though you took a trade of $1 and you lost it, you think 10 times that why I lost this money, how I can improve my strategy, what didn't work out, what I should do next. So it gives, a reason to think about your thing which you did in the trading, why you lost the money. So losing money in trading is very important if you want to grow. But at the same time, always have, if I'm having $1,000, I'm not going to take trade of $1,000. I have to take trade of 1%, maybe 0.1%, just to learn, just to see how the prices are changing, what will work, what will not work. But when there is real money involved, the hard-earned money involved, we think a lot. But when it is demo money, paper money, we just don't give.
I get it. I get it. While you were saying this, I suddenly remembered one of the Batman movies. You remember? I'm not sure which one. Christian Bale was as a Batman, and one of these one of the Batman movies where like Batman, where Christian Bale, when he was in some kind of a cave, a prison cave, right? And there was no way out, right? So the only way out was to climb the wall up, kind of to get out of that big cave, but it was very risky. And so I remember that episode because everyone who tried to climb out, they were using the safe rope, because if you fall down, you break your back, you die, you down, you die. And so he also tried, and he failed. And then he went to some kind of a old respected man, and he said, well, yeah, I'm Batman, I'm cool, but I need to get out there. How do I get out? No one can get out of this cave climbing up the wall. And that man told him, everyone who ever tried until now, they were using the safe rope. Stop using the rope. Don't use that. And then he was surprised. He said, how can I not use the rope? I can die. I will be very scared. And that wise man, I told him, fear is exactly what can kind of help you get out there. Because if you know that if you're operating in a safe environment, if you know that if your hand slips, you won't fall down. Like you won't be putting maximum effort you can to get up there. Yeah. But if you remove it, then you are in a real life mode. You know that every step you do can be as risky as up to taking everything you have. And in Batman's case, it was his life. So he said, remove the rope, then try your best, and then maybe you will get out. Eventually, of course, he got out. But the lesson is the same as you're saying, that demo account is obviously is very comfortable. Like it can probably teach you technically what needs to be done when, and then observing the market, some basics. But it doesn't teach you kind of emotionally how to get accustomed to the unstable nature of the market, right? And one needs to at least get used to that environment. And I can relate to that very much, because when I started trading real, especially when I started seeing losses, the decisions I started making, like kind of in retaliation to those losses, right? Yeah. And also, by the way, I had to overcome that thing to, I guess every beginner has that. Now, first, when you see first big losses, you want to get your revenge. Like I was angry at the market. Yeah. I was shouting. I was very angry. And I did some emotional, impulsive decisions, which also ended up badly. Yeah. And I had to take, I think it took me, a few weeks to learn that one doesn't need to be angry at the market. You better stay away. Like, does that happen to you ever?
Yeah, I think conversely, what I would say is the demo account, it's plays a crucial role in terms of building a so like building you to become a successful trader, because it's like being an engineer and developing a prototype, or being a footballer. There's still the need to practice, and the only way that you can practice to understand that is to mimic that same live game. That live game action is to rehearse or practice. So that is why we have the demo account. Of course, the psychological part plays a crucial role, because you aren't trading with actual like live fans, but then it becomes a playground where you get to understand the trail, to understand when to enter, when not to. And I remember when I started trading, the number of losses that I had, it was very discouraging. There was a time that I actually deleted the applications from my app. I said I wasn't going to trade anymore. I gave my bank card to a friend. But after a while, someone just told me losing is also part of, the game, because it's more or less, it teaches you something, one knowledge that differentiates theory, that is what you've read, what someone has told you, to, actually trading. So I think there's always the need to balance the two, that is using the demo account, because the demo account, is beneficial, because rather than taking, some risky deals on your live account because you are trading with live funds, you can more or less make that same, open similar positions, or try to, backtest these strategies from the demo account. Once you're able to generate profit from your demo account level, then you can replicate that style on the live account. Because with that, at least you are more or less conversant with the market movement. So you'll be able to, make some profit in there. But sometimes you'd realize that in as much as, you might have a near perfect result on a demo account, once you switch to the live account, you start, making certain mistakes. And that is why I think our emotions, come in, because we are more or less nervous, and we don't want to accept the fact that, we don't have to trade with funds that we are not ready to lose.
I get it.
It's price movements that can't be, that can't be predicted 100%.
What was your biggest loss on a one trade? Oh no, just give me that. Let's get real.
I think
How much money you ever lost on the one trade? The thing is small. I want to say how.
I wouldn't want to discourage anyone from trading, so I would more or less keep it personal. But I'd say I've had very significant losses. There's been times where the wrong move has more or less liquidated my account, and I've made profits on the news as well. So it's been a mixture of the two. But in terms of the losses, I'll say it's all part of the learning curve. I've learned the ropes. So that's how moves that.
Shahbaaz, your worst trade ever.
My worst trade, I would say, in Indian market. Actually, I trade in different markets, so I have a different experience in everything. Like in Indian market, I have lost in a single day, like 1/3 of a capital in a day. So 33% of loss in a day, which is huge.
In the military, when 30% of staff is casualties, that is considered overwhelmingly suppressive casualties. That's supposed to, according to the military discipline, 30% of losses makes an army draw back, fall
What
back.
happens to the 66?
Oh man, it's too much. Anyway, how did it feel? Huh?
It actually, gave me another perspective, that now you have to focus on risks as well, because I was very aggressively trading, to get more profit. I was moving very forward. I was not caring about that this can happen. And that the moment that gave me an insight that, bro, slow down a little bit. You have to step back somewhat. There is a saying, a lion, when he steps back, he takes the position to attack. So this was the case for me. It was not discouraging, but rather motivating and giving a new, wisdom that, okay, this if this has happened once, it can happen again and again.
Did you tell your father? How? I've just lost almost 50% of my funds.
Actually, that was my father's fund.
Oh, yeah.
So you lost.
Okay, now I say the situation was very serious.
Yeah.
So I was remembering that. Do you remember? I'm not sure. It was one of the first waves when Tesla stock was getting up. So it was. I'm not sure at which level exactly, but I remember that was a market situation when it was growing as much as it never did before, and it was making new breakthroughs. And I very clearly remember that moment that I'm sitting over there looking at the screen. I'm seeing that, Tesla is growing. It seems that it will be growing further.
Mm-hmm.
I'm not the stupid guy who will lose the opportunity. So I thought, well, that's a winner. So I'm going to just put my funds on Tesla, because definitely it's going up, because it's been going up for the last something. And it's been an extraordinary fast growth.
Mm-hmm.
And I lost $800.
Mm-hmm.
And I was very disappointed. I was very disappointed at Tesla, at Elon Musk, obviously, at the market. And then I don't know, it appeared to me in several occasions, even after that I'm seeing a stock which appears to be going up extraordinarily fast. Then I realize that it's on a peak. So I understand that I'm getting in on the peak.
Mm-hmm.
I was still getting in because of definitely the stock that I chose will be keeping going up. It didn't. This one didn't. That one didn't. And after that, I've developed kind of fear to open position on a peak.
Mm-hmm.
Is there any reason to that? Or I'm still thinking as a stupid,
I think usually there is this notion that,
things like never get in on the peak. Like, is there such a thing?
Yeah, I want to share like my personal experience with this. So, usually there is this notion that you buy in low and you sell high. And I remember late last year, so, Bitcoin was, rising, it created 68K.
Yeah, well, I remember.
And I said, okay, why not? This is a very good moment, because, a lot of analysts were predicting that, no, we are definitely hitting 100K or probably 500K. So I said, okay, why not, buy a couple, like, X amount and hold on to it. Then probably maybe once we hit 500, then I can do it. I can just sell it off.
Yeah.
And maybe that could also, offset some.
Sounds like a nice plan.
And unfortunately, as soon as I bought in less than a week or two, then the price started dropping. We hit 32K, 25. Then I reached out to my friends, my colleagues, that, do you have any idea about what is going on? What do you think? I said, no one has any idea. We think, probably it has to do with regulation and stuff. So you just hold on to it. And before I realized we hit 20K, 18K, that was when I almost sold everything, like emptied my basket, because there were a lot of people who were, in terms of the influencers, who were more or less claiming that, no, it's a shell, it's going back to zero or going back to the thousands. And, well, by some divine intervention, I decided to hold on to it. Then, so, some stable profit, but still, we are still caught or stuck within the range. So I'd say I've bought in low, and I've also bought in high. So it's a mixture of the two. Mm-hmm. So sometimes, it feels nice buying at a peak, and sometimes it feels good buying, when prices are practically low. But you'd never know when is the right time, because
what should a guy in a situation do? Because I've been in a situation like this, as you described. For example, like you're buying a stock or any kind of instrument, like at a certain level.
Yeah.
Even if it grows a little bit further up, it's not enough for you. You want a certain amount of profit, right? So you're waiting until it keeps growing. But let's say you bought something at the level of 100 and your aim take profit level is 130. So you buy in at 100, it grows 105, you go, excellent. Then it goes 110, you say, excellent. Then it goes 120, you're saying, very nice, but still not enough, because I'm aiming at 130. So you keep waiting, right?
Yeah.
But then suddenly the market reverses and it gets down to 110. You say, okay, a little fluctuation, still be getting up. So keeps going down to 100. You're saying, well, that doesn't seem good, but still, of course, it will be getting back up.
Yeah.
It keeps going down, keeps to 90, 80.
Yeah.
Then you are desperate. You are understanding that, okay, you wanted 130, you got in at 100, now it's at 60.
So you said low.
Yeah.
What should a guy, I'd say, like me, in this situation, I was in a situation like this, because, for some reason, I don't know, for some reason, I put take profit, I didn't put stop loss.
Mm-hmm.
And the amount of money that I put into that bad trade was pretty big. So I was in a psychological situation that I'm just too scared to lose it all.
Yeah.
But I already see that it's definitely not going into my direction. So it took me quite a while to actually force myself to cut that trade and stop it. And I was crying after that. I wasn't crying because I was saying, okay, I was stupid enough to not take it at 120. Then I was stupid enough to not close it at 100.
Mm-hmm.
Then I was stupid enough not to cut it off at 90, at 80, and 70. Now I'm 60, and I just lost 50% of my funds.
Yeah, when it comes to putting the stop loss and take profit, usually, like when I see a chart, we all see the same chart. And if we put a take profit at 130, usually most of the people will keep at that level because that is the most important level. That's why when the price starts going up, when it is at 120, 122, 124, when the price is going to hit a very important level, then before touching that point, most of the time the prices reverses. Why? The reason is people started taking profit.
Okay.
So although you are waiting for your perfect level, that perfect level may not be always achieved. And most of the trader, the practical trader, they see that, okay, I am about to hit my profit and now people will take out their position, and most people do. And instead of going to 130, it may reverse at 124 or 126. And when you see the first reversal, you are like, okay, now people have started taking the profit. Now the stock is showing me the proof of reversal. So this is the time when we close our position, and that's the time the prices starts falling because everyone starts taking their profits and it goes in the negative direction. Now, when it comes to the stop loss, like for example, 100 was a good level, you bought it. But when we see that, okay, this important level is already broken. Yeah. If that level is broken, maybe because of, if there is certainly some important level, it is only broken, it only get broken up because of some fundamental news. So there has to be some big news to break that level. Otherwise, it will just consolidate there. So if that level is broken, okay, so there is something big in the market. Now, you go back to the, you close the chart, you open the, the book, the news, and you see that, yeah, there is certainly something wrong. Now, can you take 2% loss or 4% loss, or what to do now? Generally, it's better to close the position and wait. Why? Because if the price will go to 50, I will buy again, But what if I will not sell it and I will sell it at 50? Then I will have huge loss. Rather than that, let's take a small loss, let the price fall, I will buy it again. You can have, a psychological bias in your brain that, okay, I will buy it again. But as of now, let it fall. So it's best when you're on the stop loss side, close it if certain important levels are broken because of some fundamental news. And then just sit back and relax. And then when you see a positive sign in that prices, maybe at 60 or 70, when you think, okay, now this is the moment, then you can just start taking the price again with a level of 100 and a stop loss of, if it is 70, at 65 or 60.
I think I actually used it. So very possibly I actually used it even with that same Tesla. So after I lost that amount of money on that bad trade, I thought, okay, now I'm smart. So I thought, okay, first of all, I'll put stop loss. So I put stop loss and take profit. And then I kind of decided to myself that if it goes down enough to break my stop loss, exactly as you said, I'll just wait to see how much down it will go. Then when it hits the bottom and I kind of see that it already hit the bottom, then I'll kind of buy it back kind of at the bottom, but after it starts kind of getting up from the bottom.
Yes.
And then I think I got back some of my lost funds, and I was actually not like proud. I was more emotionally satisfied with that decision. Even still, in total, I had lost my money, but I was happy that I kind of outsmarted the market. that was a very interesting experience. Now, in what you said, I understand that identifying strong levels or kind of important points is kind of crucial, right?
Yeah.
For identifying where a reversal can take place or where a bottom can take up. Do you have any kind of specific strategy or specific approach or any advice on what's the best way to understand where these important levels are?
Yeah, actually, yeah. And I would say that the thing which I use personally is multi-time frame analysis. And the thing is, I go with the big time frame to small time frame. What I mean is, you open a monthly chart. You see, okay, these levels are important. Now you zoomed in to weekly chart. You find some more levels, on the weekly chart. Now you adjust the monthly chart, monthly level with the weekly chart. Now you get a point which is important for weekly and monthly. Go to the smaller time frame on a daily time frame. Now you see, okay, certain levels are important. Now you adjust your levels on the monthly, on the weekly, on daily basis. Now you come to the hourly chart. The more you are zooming in, the more you are able to finding the right, the point, the right spot. Now you are coming to 15-minute chart frame. And now you are adjusting all the chart which is near your levels.
But on each chart, on each time frame, how do you identify that this or that level is important? What is important?
For example, if the chart is in the upward direction, there will be a straight trend line. Yeah, there will be some important level where the price has reversed or broken up and took the support and went up. So there has to be some price action to justify it. Because if the level is broken and went up and came to again, and it has consolidated, that means the market has respected that level.
Okay.
The market was not able to break that level. And this means this level is important. Now it has broken it. Then why? What was the reasoning? Okay, this was the fundamental reason. Then again, if it is testing that level and if it is coming back, that means it has already shown multiple times that this level has become strong for the market perspective.
Okay, I see. So kind of certain levels where either the price often fluctuates around or consolidates at or kind of breaks it and gets back to it. So where the price spends a lot of time compared to other kind of price action, right?
Yeah.
These are important levels.
Yeah.
Then you're saying that you have to kind of identify these important levels on multiple time frames,
yes,
and kind of match them together.
Yeah.
Right?
Yeah. Because when you are on monthly time frame, there will be, the levels are very far away on 6,000 or 7,000. But when you zoom in more and more, like in a weekly time frame, on daily time frame, you will see the level which the market has, I would use the word respected a lot of time. So if the market is respecting that level, if we will identify those points, that gives most of the time the market do respect their previous level. So it will show some price action there. And if it is breaking up, you can take up trade. If it is falling back, you know that, okay, now I can open a downside position. So that's
okay. Yes. Now, Alex, I remember you said that he prefers trading every day. Do you trade every day, or like you prefer doing it like once every 2-3 days, or more like positional long-term trading? What's your preferred approach?
Actually, I use different kind of approaches. If I see, for example, the market is going to up 3% up, then I trade in scalping mode. That if the market will open 3% up, there has to be some replacement, retracement. Why? Because if the market has moved 3% up, there will be people in profit who wants to book their profit. So the initial reaction will be downwards, and then maybe it will go upwards. But if the market has only moved 0.5%, it's not that big. It can happen every day.
Okay.
So small differences will not justify your scalping. I'm talking about a scalping right now. So if it is 3% or 4%, you can see a retracement most of the time. Now, this is scalping. When it comes to day trading, there can be some news, for instance, or some price action. For example, I trade slow momentum. Like if there is a big volatility, the price can go down or up. But if the price is going consistently in upward direction, this is perfect time for FTD trade because the price is consistent, slow, and in the unidirection. So in this kind of trade, you can open in FTD. There is not big move to open in Forex with leverage and all. You can just open a small with a small money.
I see.
But in the same direction.
And what I was trying to understand is there any kind of correlation between the best time frame to use and the your trading style? Like, for example, is there any such thing in trading that, for example, if I like to trade every day and open and close trades within a day, this time frame is the best for me compared to if I prefer opening long-term trades, let's say a few trades in a week, then another time frame is best for me. Is there such a thing, or kind of it's still not measurable?
It is very relevant, I would say. On the daily time frame, I would say the smallest time frame which we can look at is 5 minutes. If we will go lower than 5 minutes, it's all volatility. It may go up, it may go down in 1 minute time frame. We don't know anything. But the best time frame for on the daily basis is a 15-minute time frame. Because 15 minutes is a lot of time. 15 minutes is the time we cannot, hold our breath. So if a market is holding some level for 15 minutes, it means a lot. And on 15-minute time frame, if the price is going up or forming some price action, it is very crucial on the daily time frame. But if you're a positional trader, I would say 1 hour time frame is very underrated because people use daily time frame, but daily time frame already contains the whole day in single chart. But a hourly time frame can show 12 candles of 1 day, so it can go up or down, or it can show some more insights, but it is very underrated. People rarely use it. But if we will see 7 days of 1 hour chart, you will see a good move. You can, and when you will zoom in and see in 15 minutes, you can have a very good understanding of how market is reacting. So on daily basis, I would say 15 minutes, and on weekly basis of positional trading, I would say 1 hour.
Okay, I get it. Alex, how about you?
Well, I think in my case, since I mostly scalp and every now and then like open a couple of positions, that is based on the monthly basis, I would say it's always better to narrow down. That is the time frame, just like you mentioned. But what I believe in is that like narrowing yourself to like 15 minutes time frame, there's a lot of noise that still hasn't been, separated from the main action, right? So let's say you have a breaking news that is a high impact news about to hit the market. Usually once the news hit the market, you have barely like 5 minutes, because once it hits, the market is expected to move in a certain direction. So if you compound, that is, let's say 5 minutes, a 15-minute candle, that means you have like the entire 15 minutes that is in one case. So it's very difficult to separate the noise. But let's say if you are scalping for 5 minutes, for instance, you can break it down to, let's say, 1 minute to understand. So once then you see the market, you are capable of, making very good profit within the first 3 minutes or the first 5 minutes before movement stabilize in that direction. Similarly, let's say if it's for positional, yes, I totally agree with him about more or less trying to look at the market from a multifaceted position in terms of the hourly and the hourly and the daily time frame, just so you get to understand how the price movement has been over that is the entire day or the entire period, just so you can understand whether if there is the need to open an up trade or a down trade. So in any case, if I'm scalping for, let's say, for 5 minutes, for instance, I would on any day, that is, check out the time frame for 15 seconds, for 1 minute to 5 minutes to get a better view of where price is expected to move within the next minute or two. And then I can more or less capitalize on this market situation to make some profit. Because, the goal of scalpers is to make profit within the shortest amount possible, like the shortest time.
Is that the reason why scalping is your favorite?
Yeah, because, it provides me access to maximum profit or maximum returns compared to having to sit back. And in my case, I'm basically trading as a profession itself, because it's more or less making me self-independent. I'm not relying on anyone. So when I sit back and I realize that, yes, there is an opportunity to make profit within an hour or two, like if I'm to, let's say, open this number of trades with a risk to profit ratio of, let's say, 1 to 3 or 1 to 4, yes, why not? I'm guaranteed to make a lot of money in there.
You agree with the logic, Shahbaaz?
It's a style of trading. So I won't say, because I'm not in that style, so I cannot say like how profitable it is or not, because Alex is already profitable. So that means that it does work. But for me, when I use scalping, I usually trade scalping when there is a big move already. So I just see.
So your scalping choice is conditional to something.
Very much conditional. Because I have seen, I was also a full-time scalper, I would say, for 3 or 4 months. So at that time, I have realized that if the market momentum is low, it can go in any direction. Like I was not able to predict what can happen. But if there is already a big opening or big fall, for big, I mean more than 2%, then generally there is retracement. Generally, the prices are in my favor, in my view. So in that case, I put my stop loss and I just scalp in the few minutes, in few 1 minute or 2 minutes. And as soon as I see that, okay, now the market is moving in another direction, or okay, I'm not going to make profit now, so I just close my position.
Very interesting. In fact, I think it's a very question to ask our viewers what they choose and why. So let me just share this question with our viewers. Please share with us in the comments what is your preferred maybe trading style or scalping position trading, whatever it is. But more importantly, please share with us why you are choosing. Like for example, Alex, he told us that he chooses scalping because it allows making the maximum number of open trades in the shortest period of time, and hence making as much profit as you can in a short period of time, right? So please share with us what's your motivation and logic to choose a certain approach to trading, and what is that approach, and also how successful is it? Let's say I meet a person, that person is into trading. That person tells me I'm successful. My next question is not like how much, but what makes you think that a couple of good trades here and yesterday makes you a successful one, right? What I mean is there should be some kind of consistency, no?
Yeah.
With me, with that Tesla thing, I've lost this much, next day I won this much, but neither of that meant that I was successful. I mean, even professionals have losses, even just rookies, they can, each of them can have a good trade. What is success for each of you in trading? How do you scale?
For me, success is not in terms of absolute term. It can be in terms of percentage. For example, if you will start thinking in terms of percentage, how much percentage of times you were in profit as compared to in losses? I have made 20 good trades and 5 bad trades. That means I am in good ratio, I am more successful. My percentage of success is more. Now, the second thing is, how much percentage of profit are you able to generate from your capital? I have $100. I generated $30 last year. So my percentage is 30% of profit. If this same percentage I can implement on $1 million, it's $300,000 a year, which is a big amount. But we cannot say or justify it in terms of absolute terms. Because maybe someone is making on $1 million, but you have made on $100, but still you are successful because your percentage of profit is big. And with this consistency in this percentage, you can beat big players with lower percentage of.
I get it. So kind of yearly return percentage.
Yeah.
That's your benchmark.
Yeah.
Alex?
Yeah, I think I agree with him, and also I think there's the need to balance, to have a good balance between your risks. That is, have good risk management strategies in place. Just so in my case, for instance, every time that I lose that is trades consistently, I take a pause or a break, and then maybe do something different, or maybe trade on a demo account or check out the news. Because I believe that to be a successful trader, you have to be very disciplined. So once you have 1, 2 trade loss, you have to, stick to your trading plan, and then you move back, you take a step back, try something new, something different, and then you move back into the game. So it's more or less, gets you focused, and also ensures that your losses do not, accumulate more than your gains or your winnings. So let's say if you can have a very good opportunity, and then you have what we call, that is most market folks describe as dragon trade. So if you can open, that is, multiple fast deals within that set duration, you are capable of recouping whatever of money that you've lost. That is from the 3 trades. And then it gives you a head start. And then, so once, you accumulate profits to a certain level, there's always the need to withdraw something, to pay yourself. Because once you start paying yourself, you become, very serious about trading. You consider it as, a full-time job. And then you also get to carefully analyze your success rate in terms of the winnings, your winnings and your losses. So in there, then you'd understand whether if, your risk to loss or risk to profit ratio is balanced, you're making profit than losses, or you are making losses than profit. So that will make you, it will encourage you to take an informed decision whenever you wish to open a trade.
Informed decision.
Yeah.
I like the term. Informed decision. So what's your ratio?
Well, I always stick to the 1 to 3. So in any case, that is why every time that once I have three losses, I just pause, just take a break, and then do something different. Check out the news. Maybe I have a cubic, just it is, distress, because I feel that maybe because of my emotion, or maybe there is something happening in the market that I'm not privy of. So I just take a step back, play with it a little bit just to relax, because you've lost actual funds, and there is the need to take irrational trades. During that period. So once I have 3 losses, take a pause.
You mean 3 losses in a row?
Yeah, 3 losses in a row. So usually in my time, in terms of my stuff, for instance, for every time that I sit behind my PC or my phone to trade, I dedicate like not less than 1 hour and a half or 2 hours maximum for that session. And in between that, I scan the market, that is different assets. Checking out multiple different time frames, which are set as stable movement, which one is guaranteed. And from there, then we start, the whole 5-minute thing. And then,
so you're saying your average trading session is 1.5 hours?
Yeah, like 2 hours. Yeah, 2 hours on an optimal level.
Don't get
take a break.
Don't get tired.
No. I actually have hours.
1.5 hours and
it's 2 hours. I always have a cup with your that is why I always have a cup of coffee by my side, because it's more or less, it distracts me to a certain level, to a certain extent, because it's like, you are focused. You can't be 100% focused on your piece without having, a sip of coffee, because that sip of coffee,
it
brings you back to reality.
Yeah, but then this 1.5 hours, are you 100%? Is your attention 100% into trading, or within that 1.5 hours you can watch a movie or go outside or have a drink, relax, or you're dedicated to 100% attention trading?
Yes, 100% dedicated. Because it's all about focus,
and like this every day.
Yeah, almost every day.
And one trading session a day.
Yeah,
right.
Sometimes I think I have 3. It depends. So let's say from during the Asia session, the European session. So once the American session opens, because the market, so I trade on there for a while, just an hour.
And just saying that the trading is your full-time.
Yeah, it's something.
What you do the rest of the time during the day? Like you say, one trading session is 1 hour. Okay, let's say you have 3 trading sessions in one day. Still, it's 4.5 hours.
But out of
The rest of the time, what do you do?
yes, but out of 24 hours, let's say if you minus 6 hours, for instance, you still have 18 hours remaining, and that's 18 hours. You can do a lot of stuff with it: to read the news, to watch a movie, to go for a walk.
That would be a very dedicated person. Like 6 hours of trading, then you read news and still this.
Yeah, I think it's all about a dedicated mind, because if you're a dedicated trader, you should consider it as, as a job, something that gives you that passion, because it's still part of the learning curve. And I think, dedicating 3 hours or 4 hours a day to trading cannot be compared to, let's say, working an average job where you are working from 8 to 5 or 9 to 5, because that's also straight 8 hours of work.
And so you're saying all of that is thanks to coffee.
Yes, I always have work.
It should be now at the time for a coffee advertising, right?
Yeah, so
now I have to present our coffee producer.
yeah, so usually it's just the coffee. And I'm hoping probably maybe one day I'll just have my own brand, my own coffee brand.
That's a good motivation for our traders. Yeah, so be dedicated to trading, and once you will be able to open your coffee business of your own.
Exactly, and you can have a sip of coffee.
Shahbaaz, what's your approach? Like Alex is so scalping every day, daily trading, 1.5 hour trading session every day. The rest, dreaming about this coffee company. So, like, how do you approach?
Usually, I don't have, a very defined way of approach like Alex is doing. Mine is mostly, event-based trading. If there is some kind of a big news which I can trade, if there is some earning report, some shocking news, so I trade that, or certain price action which I like or which I am profitable in and which I understand better. If I see something like that on my chart, then I open the position. Or if I see that, okay, today is not my day, I just sit back and relax. So more kind of a chilled.
What to say to traders with this? How do I say? I've known people who they were dedicated, or they were trying to be dedicated, but I guess they didn't know how to be that, or maybe they haven't found their way of making it yet at the time when I knew them. So I often heard from them that, okay, the person tells me, I opened a trade, I opened a couple of trades in the evening, then I went to sleep, but then I know that some big news is going to be out my time, like 2 or 3 a.m. So I had to wake up at 2 or 3 a.m. all nervous, kind of very anxious of that news, then stay awake for another 3 hours. So losing a good night's sleep for a good part of that night, then getting back to sleep, anxious how the trade closing would go, or losing the sleep in general because the news out. So it's about what you said. If the fundamental news is about to be released, what do you suggest to people who want to kind of follow the market? Is there any limit to which they have to say, no, today I need to sleep, I don't care what the news will be? Or they need to not open trades before they go to sleep, or something like that, something practical? Is that
I have tried this approach, and I would give very good advice for that. And that is, if you are getting nervous about your position, I would say your position sizing is wrong. For example, I am still on the trade, I have an open position in market, but I am relaxing here, I am chilling out with you, having a podcast. Why? The reason is my risk to reward ratio is intact. I know that if I will lose, the maximum capital which I can lose is this amount. And that amount doesn't bother me. That's why I am not anxious, because I had defined my the biggest loss which I can take. And I know that in terms of my whole capital, it's not that much. If you are opening position with very big leverage, with whole of your capital, even though the price will move a little down, you will be very anxious. So if you are anxious, if you are becoming anxious, that means your position sizing is wrong. You have to slow down a bit.
Then, as far as that, it simply means that, for example, if I have $100 and I put all of these $100 into one trade, it's a very risky thing. If I divide this $100 between, let's say, 10 trades or something, right, that will be kind of losing one trade is not a bad thing. Now, what is that specific amount that your position sizing is referring to? What's the percentage of the entire deposit or fund that you have that you would suggest is the maximum amount advisable to invest into one trade?
Yeah. I would say not to lose more than 5%.
5%.
In a single day. And 5% is a lot, you see. And on the safer side, I would say 2 to 3%, but not more than 5% in a day.
You have the same?
Yeah, the same. Yeah, I think it's one of the best risk management strategy that anyone can employ, because it's more or less guarantees, it guarantees a stable return, and also in terms of the funds in your wallet as well. Because, compared to, let's say, trading with 50% or half of your entire deposit, it's totally risky because you still have the risk of losing everything, and also the possibility or the opportunity of making extra profit on that. But then limiting yourself to, let's say, 2 to 3%, I think it's one of the best. I also practice that because my goal is to open multiple trades within that 1.5 hour or 2 hours maximum period. So sticking to, let's say, 2%, for instance, I'm guaranteed of continuously opening multiple trades, and also minimizing the risk of losing everything in just one deal or one position.
Makes sense. A lot of things to discuss. I think I haven't asked all the questions that I wanted. You know what? Before we close, is there something, just one thing, one specific thing that each of you would suggest or would recommend to our viewers? Let's say you are experts. You've accumulated a lot of practical knowledge, right? So if you were to kind of compress all of that massive knowledge into kind of one phrase or one sentence to be used by traders so that it serves them best to make the profits, what would it be?
For example, I would say stop thinking about absolute figure. Think in terms of probability and manage your risk. That will eventually make you successful. That's the statement I would like to.
Yeah. Engineers, technology. I like it.
Yeah.
What's yours?
Well, all I would say is don't give up. There's nothing impossible in this world. So you just have to keep learning and learning and practicing, because it's all part. Losing is part of the learning curve, because that is when you'd gain a lot of experience or exposure to the markets in terms of the shocks and whatnot. So you just don't have to give up just because you've had some series of losses. Just learn to practice, healthy risk management. And then, there's nothing impossible. So dreams can be a reality if, you believe there's nothing impossible.
Oh, how motivational that sounds. All right. I like it. Well, then, I guess I got nothing to add except for my Teslas. So, everyone, thanks for being with us. Shahbaaz, Alex, experts of Olymp Trade. Pleasure to have you.
Thank you.
Nice to be here.
Yeah.